Good morning, everyone. Welcome to the Macro Snapshot. We are Friday, October the 3rd, 2025, recording this in the morning. Now, normally on this day, we would have non-farm payrolls, which obviously is incredibly important data for the Fed because we know that there's a certain tension at the moment between their twin mandates of too much sticky inflation potentially, but with a potentially weakening labor market. So we don't have that data today because, as we all know, the US government is shut down maybe for another week or two or three. A lot of politics going on there. So we won't have any of this data here. What we do have is some information, some surveys from the ISM services. We had a bit of a mixed manufacturing number the other day, but in the services number, which we get at about 10 o'clock, that's expected to basically remain unchanged. You see, before it was 52, expected to come in at 51.7. That's the consensus. So that's still in expansion territory. So that is would be a positive for the services. The prices paid, though, you see here, expected to come in at 68. So, a touchdown from last time, which was at 69, but still, that's very elevated. And that's the kind of problem which the Fed is preventing the Fed from being maybe a little bit more proactive in supporting the economy and cutting a little more aggressively. So that's going to get quite a lot of market attention. New orders, as always, is more forward-looking, so that's important. But again, for the services component, still in expansion territory, so that's a positive. And then the employment one, that's possibly what the market will be most looking at, combined with the prices paid. Because if the employment number, it does come in this low, 46.6, last time 46.5, that would, continue to point to a labor market which remains on the soft side, not necessarily collapsing, but not in expansion territory. So the point is that's what we've got. We also have S&P Global. That's going to be the final read. I don't think that's going to be particularly sort of market moving, to be honest. So let's just focus on the 10 o'clock ISM numbers. And the lack of volatility, the lack of data is also causing a lack of volatility. If you could look, we can look at a lot of markets here. You see that just first of all, just have a quick look at the VIX. You see the VIX is pretty stable here. It could be a little bit lower, in the 13, 14 handle, but basically here at 16 and a bit, implying a move of about 1% per day. So that's still relatively a low vol. And if you look at something like the MOVE index of bonds, you can see that that's actually very, very, very low here. This is an overall index of bond volatility. And just to give a little bit of context here, now it was at 71. Just historically, you can see that's very, very low. And essentially what that's telling us is that the market seems to be, basically saying, hey, we know what the Fed's going to do. They're going to cut, let's just see what it's saying here. But basically the Fed will cut, twice this year. If we just look, if we just have a quick look here, it's saying the Fed will cut, 1.8 times, let's call it twice this year, down about 50 basis points. And then probably next year, about another two or three times, maybe another two or three times. The market seems to have settled into that as the thinking. And therefore, volatility is very low. The market says, well, until and unless we get some major new information in the form of data, we're just going to go with that. So as long as volatility remains low, that's historically always been a positive for the stocks. The stocks absolutely do not like high volatility in yields going up and down. And as you can see, the S&P 500 just continued to grind upwards. AI, we saw a new valuation yesterday for OpenAI, the makers of ChatGPT, up to $500 billion. CAPEX deals seem to be rolled out every day. So AI just grinding, the ES 500, the S&P 500 grinding higher, the ES here, not with any particular energy. It seems just to be sort of constant inflows. If we look at the NASDAQ futures, similar kind of deal here. You see the Russells, not quite as strong, but still almost at all-time highs. I mean, there's no real bad news here. And if you look at, let's say, equal weight, that's also trading at highs. And of course, the Mag 7s. So, all across the equity space in the US, very positive. We have, relatively calm bond yields. We have a Fed apparently which is going to be cutting, unemployment which is apparently maybe softening but relatively stable, inflation which is a touch sticky but nothing to worry about. And hey, we don't have any data, so there's no contrary indications at this point. We also see over in Europe, if you look at the stock 600 making new highs, we'll see if that's just going to be a bit of a fake out and push higher. But basically fairly positive. We see over in Germany, a little bit of overhead resistance, just banging its head against this overhead resistance here, but still overall fairly good. Talking about Europe, we do have Klaus Knot, who was the Dutch, the head of the Dutch central bank. He is sort of leaving today. There's a big sort of a farewell symposium. Lagarde was just speaking at that. We also had a couple of other ECB members and just speaking in his honor. And it's interesting. Lagarde said that Klaus Knot, would make a potentially excellent president of the ECB. I wonder if that's some sort of allusion to Lagarde leaving and maybe not being nominated. Keep in mind, though, he's more on the hawkish side, but that's very much a political issue for the future, so we won't worry about it too much. But what we do have, we had Wunsch, who's on the governing council, essentially saying that rates are in a good position. And if we look at the what's priced in, we can see here that seems to be what the market is thinking, and what most of the board of governors, so to speak, in the ECB are thinking as well. As you can see, basically no cuts really priced in. We have to go all the way until the sort of the autumn of 2026 to see even something like 35, 40 basis points priced in. So not much at all really. I mean, basically we're seeing sorry, this is the chart, the potential of a cut. You see only a 40% chance. So in terms of basis points, 8, 9, 10 basis points for all of next year, basically the next 12 months. I think that's an interesting one. I'm looking at it. I think that assumes a Goldilocks scenario of an economy which remains robust. I mean, I suppose that's obviously possible, but it's interesting to me that especially all the way out through 2026, with the Fed themselves on course to cut another 100, 125 basis points, that the ECB sort of market watchers are not pricing in something a little bit more, at least towards the end of 2026. Although having said that, of course, keep in mind that the effective rate in Europe is 1.92, in the US it's 4.09. So we do have about, what's that, about 210 basis points of difference between the two. So there's plenty of room for the Fed to catch up for sure. Other interesting things which are sort of going on. Just while we've got this up here, let's just have a look at Japan, because we have a couple of things going on. So you see Japan for the upcoming meeting. The market's pricing in about 50%, just over a 50% chance of a hike actually. And you see here 13 basis points, and pricing in a full hike by essentially maybe not January, but sort of more like sort of midwinter here. So sort of January, February, something like that, up to one cut. So that's going to be an interesting one. Some people are saying that maybe this is a little bit on the dovish side, and that actually a hike by the end of 2025 is much more of a possibility. In which case, these numbers of basis points from 13 and 18 should probably be up more like 15, 16 to 21, 22. We shall see. But last night we did get a speech from Ueda, who of course is the governor of the Bank of Japan. And just, bottom line is that one of the key quotes, he said he's got to focus should remain on providing an accommodative stance to help the economy. So not exactly sort of hawkish, and not exactly sort of forecasting a sort of a rate hike anytime soon. So it's interesting that the base case, or the base sort of context, shall we say, for Ueda is for an accommodative stance. And so maybe this pricing, maybe with that context, that is kind of correct. If we actually just then have a quick look at the yen, we can see, hold on, where is the yen? Let me just find it, sorry. Where have my currencies disappeared to? Zero volatility, very, very low vol at the moment in all of these currencies. As you can see here, the US dollar has weakened a little bit against the yen, but you just see on this daily chart here that the US dollar popped just a little bit on those Ueda comments. But again, we can't really read too much into it. This is just sort of in a trade range. Just while we're here, if we look at actually, just before we go off the yen, keep in mind that we do have the LDP, so the Liberal Democratic Party. We have their sort of voting for a new leader this weekend. And keep in mind that in Japan, it's very much the rank and file who can vote. So over 1 million people who are eligible, registered members of the LDP can cast their vote. So over 1 million people potentially. And going for Takeichi or Koizumi, Takeichi is the favorite. We'll see what happens there, and potential implications for the yen. But just if we look at the dollar index here, you can see that it's really, it's going up and down a little bit. But the reality is, look at this last 3 or 4, 5 days, trading in a very, very tight range, waiting for more information about the economy, waiting for data, waiting for central bankers to say something, and waiting, I don't know, waiting for Godot. We'll see. So just very low volatility. What we do have, which could get a little bit more volatile, we have the oil cartel, the OPEC Plus meeting this weekend. If you look at this price action here, very key level, as you can see here on the 60, what is it, let's call it about $61 here. We did breach that yesterday. It's subsequently come back, but just hovering around here. And there's rumors swirling around that OPEC Plus, led by Saudi Arabia, of course, they may actually push for even more production, maybe another 300,000 or 400,000 barrels per day. Interesting, the Saudis, I was just reading yesterday, the Saudis are exporting more, so definitely their production is going up. I think the last month was up about 320,000 barrels, if I remember correctly. So the Saudis are definitely saying, hey, we want more, a bigger share of the market. And if the prices remain sort of stable and, even a little bit soft, that's okay, because we'll be pumping more. And that's interesting here that especially in the WTI, it's really on a precipice here. If we do get significant increases in output, we'll have to assume that this level will be broken and we could head down at least to 57. On the other hand, if production quotas remain stable, this is a pretty good support level, and it wouldn't surprise me if we get a little bit of a bounce. Just talking about oil, we haven't looked for a few days. Let's just have a look at some of the more technical stuff. So the curve. So if you look at the curve here of WTI, you can still see that it's in a backwardated state. So you see the front contract is trading at a higher price than the further out contracts. But we do have this very curious dip in 2026, which is then followed by sort of a steepening of the curve. And it seems to be and this is relatively unusual. Normally you'd expect maybe a less aggressive curve, something maybe more like this. So this big dip and sort of plateau all through 2026 does seem to be indicating that, for the moment, the inventories are correct, but there's maybe too much oil being produced. There's a lot of surpluses around there, and if you can see that, I was just looking yesterday. There's an interesting. I think there's oil. Hold on, let's see. I think it's crude oil on water. It's an interesting one. I don't want to overread into it. Let's have a look here if we can find it. There's an index put out which has basically the amount of floating storage or oil which is floating around, either being stored or shipped. And the point I want to bring to your attention here is that this is substantial. This is a daily chart. You can see that this is definitely going sort of higher. Normally, seeing these sort of levels here, but really sort of breaking out. And so the point is here, is this, just another little indicator that, there's a little bit too much oil being produced in the world. There's a bit of a surplus. Storage is starting to fill up. Inventories are starting to rise a little bit. So I thought this was an interesting one, just the amount of oil floating around in storage and on water. But again, it is a little, let's maybe not overread into it, because there is some complexity that a lot more oil is now going around the South Africa, the Cape of Good Hope there, rather than through the Suez Canal, just because of the Houthis. So it could be that oil is actually literally spending more time on average on water because of these longer sort of supply routes and whatnot, shipping routes. I mean, it's an interesting one. On the other hand, if we actually then look at the calendar spread, so I've just taken a very sort of tight one, so CL1 to CL2, so the first versus the next month. You can see that obviously on the top here, top panel, we have the prices going down. So we know that oil is weak, but also you see the spreads here. The spreads are still positive, about 34 cents between the prompt contract and CL2. But you can see that along with the outright price, the spreads are actually, sort of slowly, sort of softening. But as you can see, they're relatively stable, but they are just slowly weakening. And I think that's probably a fair reflection of just where the oil market is at the moment. There's factors for, one could argue that the global economy is reasonable, that demand is reasonable. There are some sort of geopolitical risks. There are potentially extra sanctions happening on Russia, et cetera, et cetera. So there are sort of some relatively supportive factors. But of course, you have the whole idea that OPEC Plus is starting to produce more. Maybe the Chinese are not buying as much as before, et cetera, et cetera. So it's a fairly balanced market here, but it is starting to trade a little on the heavy side. And if we just throw in some, let's say some classical moving averages, for example, the EMAs, 20s, 50s, 100, 200. You see very tight range. Look at all these EMAs, very, very tightly clustered here. But we have broken down them significantly. And as I say, if we do breach this level on maybe extra output news over the weekend, this could definitely break a little bit lower. And we also see that gasoline, for example, is also trading on the heavy side here. We had a significant build on Wednesday, a couple of days ago, in the US government numbers. So gasoline also trading on the heavy side there. Okay, guys, I might just leave it there. One thing I will just point to, precious metals remain elevated, but of taking a little bit of a breather. You can see here gold, just a little bit of a sideways consolidation here. But again, looking at all these moving averages, very, very strong. It's difficult to short this market. And I think, if gold were to come down, let's say to 37.60, there'd be a lot of dip buyers there. Similar situation with silver. Again, just having a bit of a sideways consolidation here, maybe waiting for a little bit of data or some new direction, but just sort of sideways consolidating. What is interesting is that copper, if you look at this big sort of drop from the Trump reversal on the tariffs, copper, grinding high nicely. It's now breaking out above its moving averages. You see here that the shorter term moving average, the 20, is potentially about to cross over the 50. So a little bit of upward momentum yet. But I would just caution that we still don't. We're not above the 38% fib retracement here. So although this is a nice sort of upwards move, it's not necessarily anything which technically cannot sort of reverse. I want to see it probably up a little bit higher to start breaking into these zones here to really confirm that move here. But for sure, that's looking fairly positive. Okay, guys, I'm going to leave it there. As I say, the main thing to be looking out for, we have a speech from Schnabel from the ECB. We have a few Fed speakers, and we do have the ISM services coming in at 10 o'clock. So that'll be an interesting one. And of course, our friend Mr. Trump will no doubt be pumping out the tweets as well. Okay, have a great weekend, and we'll be back on Monday with the macro snapshot. Thank you.